Good morning, everyone. This is Max from learnthepriceaction.com. Welcome to my lesson on trading false breaks. Um, what I plan to cover in this is basically um, what are false breaks and what is the psychology behind false breaks. How do the false breaks look on daily charts and 4 hour charts, and we'll study some example charts. And the fourth thing we will do is basically how do we trade the false breaks. I will give you an idea of what the strategy is all about. Just to give you a little bit about myself, I am a part-time trader and an engineer. I have a great job which I love, but I do trading part-time. And I believe one of the best way for any trader out there to be successful is that you don't have to sit in front of the computer all the time. The strategies and the system I have developed and I am using, which I've learned from my mentors, is something called part-time trading. In part-time trading, what exactly you do is you look at the signal at the end of the day, and if it makes sense, we'll take the trade. If it doesn't make sense, we will not take the trade. It's as simple as that. So it gives me flexibility to earn money from trading at the same time be an engineer with the government of Canada. So some of my interests are basically I research on price action, and I have spent a lot of time in researching how the markets behave, how the markets move, what happens when this happens, what happens when that happens. So that's one of my interests. Second, I actually write actively on learnthepriceaction.com, and that's my blog. And as interest on the side, I have a lot of interest in astrology, of course, writing and music. So, without any further delay, let's get into the psychology of false breaks. Now, how many times have you gone into the market and your stop loss was hit, and right after the stop loss was hit, the market moved against in the same direction you were planning to go? Okay, and this keeps on happening time and again. You put your stop loss, and you enter the trade. You want to go in one direction, but uh, what happens is that okay, looks like there's some echo happening here. I'll try to fix that. 1 second. Okay. um, so the psychology of false breaks is simple. Basically, it is divided into two things. One is scenario one, which is called stop loss hunting. Generally, what happens is that institutions know where the obvious stop loss placements will be. Okay, so they use their money to put positions against people, so that they can take their orders and use your money to sell or buy again in the market. Okay, so once that happens, what it does, it creates a vacuum in the market, and people start to panic and either close their positions, and at the same time institutions and other professional traders take advantage of this and put more pressure against the panic and drive the market. So that's the scenario one. That's one of the scenario how the false breaks happen. Second scenario is buying cheap or selling high. So the institutions and the big players, what they do is they're made to believe that there is a true breakup. Okay, so the people who don't know what they're looking for, they jump in and start to go in the direction of the breakup. The next day or during an intraday session, the markets push back and go against you. Okay, as the institutions take larger positions at a better price. So imagine, like, the market moves in one direction, that is a better price for people, right? So people take the trade, And what they do is they think that that's a good price, but institutions, for them, that's a better price to go in the opposite direction. So this creates a vacuum in the market, and it drives the prices in the opposite directions as everyone's stop loss is being hit and the market pushes against them. So that's one of the scenario. These are the two scenarios that creates the false breaks. Okay, now let's see how exactly do the false break look on daily and the 4 hour chart. I will try to cover simple examples, and then from there you will be able to see if these false breaks happen time and again when you try to do your own research when you go back to the market. So some of the standard false breaks, how do they look, is basically, if you look at the figure 1 here, um, what exactly is a false break? False break is that, you have a high. For example, this is a daily candle, right? This is the high of the candle. But what happens the next day? Market pushes um, and breaks the high, and then it comes back and closes below the high. Okay, that is one. That's a standard, the classical false break. Okay, second one is that you have a false break where you have a small candle and the market pushes and pushes up. You see how it breaks up and it pushes down. That's the second type of false break. And the third type of false break is basically you have a large candle and a market breaks high and comes back, and then a small indecision happens. That's the third type of false break. Okay, these are three standard types of false breaks that you will see time and again in the market. Okay, but if you know how to trade these false breaks, you will have no time in understanding what is the psychology behind them. Okay, when you see a large candle, like this, what do traders think? Traders think that it is the time to go long, and that's the time when institutions, they think that's the time to go short. Okay, so you have to think how the big players think. They buy low at the low price and they sell at the high price. Okay, and you have to always look for false breaks to make money, because that's the time when traders are trapped in the market. When the traders are trapped in the market, they want to exit their positions, and at the same time, there is a pressure from professionals and the hedge funds and the big players, and the market propels in the opposite direction. So this is a simple setup of a false break. Okay. The next type of false break I'm going to share with you is called false breaks with inside bars. Okay. This is an extremely powerful signal. What happens is you have a set of inside bars. So 1, 2, 3. As you can see, these 3 inside bars are within the mother candle, right? And then next day, what happens? The market pushes down, breaks the low of the mother candle, okay, and then next day market pushes back in. Okay, that is a very powerful scenario because everyone thinks that this is the breakout of a consolidation. What is it? This is a consolidation. Inside bar is a consolidation, right? Now what happens is that market pushes out and pushes back in. People who were short here, they wanted to go short here, but next day the market pushes against them. So there are two scenarios. You have to either close your position and exit, or you would have to you have to go in the direction where the market is going. So it creates a vacuum in the market, and the market pushes very strongly in the opposite direction. Okay, same scenario here. You have a set of inside bars, and then what happens is the market pushes high, breaks, and then shimmies down. Okay, that's another scenario of a false break. And this is another classical false break where people, I love to trade this setup, where you have an inside bar with, and then the market pushes and closes below the high of the mother candle. That is a very powerful signal, and to go in the direction of the trend, or sometimes as a counter trend too. So let's look at some of the examples of the false breaks and see how they look in the market. So the first chart I'm looking at is the daily chart. I only use daily charts and a 4-hour chart, and I'm going to share the trades with you that I personally took, and I'll share with you why I took them. Okay, so the first one you see here on this chart, this one right here, the market was trending down. Okay, and there was this false break that happened, and I did not take that because I really don't know, because it wasn't coming to this level, so I did not take that. But the next time the market comes to the same level and creates another false break right here. So once another false break is created, that's an opportunity for me to go short. So I took the position, and when the market came down into the weekly support. Okay. Now, as you can see, the market pushed very rapidly high. Okay, and it has consolidated here, and then over here it pushed higher again. Okay, and then what do you have? You have a series of inside bars, as you can see right here, a series of inside bars. And what happens after that? Market pushes down, as you can see just below the pointer number 2. The market pushes down, okay, and then closes back above the low of this mother candle, and then market starts to propel. Okay, so this is a classical false break which I personally took on Euro and New Zealand dollar, and a lot of other people took as well. Okay, so let's go to another chart, GBP JPY. Okay, so we have 3 false breaks that happen on the daily chart. The first one is, you have right here, you have a daily support level. As you can see, market pushed below the low of this candle and pushed high and closed above it. That is a very strong signal for people to go. As you can see how the market pushed down, it was made for people, it was made to believe that this is a true breakout to go short. But what happened? The market pushed against them and then pushed higher, but it propelled higher. Okay, and then after that there were many other signals which I'm not discussing here, but the point I'm trying to get across is that how to trade with the trend, because the trend is long, so you want to trade with only the trend that's in front of your eyes. So you can see the market comes down, and on the support again you have a false break and an indecision. That is another signal for you to go long. Now, for many people, when they see this red candle, they're like, okay, I'm not gonna go long here because this is such a strong candle, I will never want to go long. But look what happened next day. Market pushed down and consolidated, and it was an indecision, and then market propelled back up, and again it went and crossed this level. So this happens time and again in the market. Now again, that there was a signal that happened last week which I did not take actually because I missed that signal, but this was a very powerful signal for people who wanted to go take the trade. Okay, as you can see, the market broke the low and then formed a large tail and then pushed back up, and then market propelled higher. Okay, so let's look at some other examples. I'm looking at a 4-hour chart on Euro New Zealand dollar. So the trend is down, as everyone can see, and this is a trend line, and as you can see on the 4-hour you have a false break that happened right here. That was actually a very strong false break. This number one false break is in line with the daily trend, so you would have taken it out. You don't see the whole picture but of the chart here, but this false break was in line with the daily trend, so you should have taken this trade. But right after that, when you see a trend line forming, this was a counter trend, but there was a significant drop that happened right here. So and another false break happens, you could have taken the trade on this one as well. Now the market pushes back again a series of inside bars, false break, market pushes down. Okay, so this is how you would trade on 4-hour chart when you have a trend line, or you see a lower low and lower high sequence forming in the market. Okay, Um, I'm looking at a Euro US dollar daily chart now. And excuse me. Yes. So as everyone know, Euro US dollar is in an uptrend. And there was this signal that I personally took, but it failed. It was a very strong false break, but it failed on me. That's absolutely fine. Some signals you will have failures, you will have wins, but the idea of trading is that your wins are more than your losses and you manage your money. As long as your wins are two times or more than your one time loss, eventually, even if you lose 50% of your trades, you will end up making money because your wins percentage, the amount of money you win, is two times or 1.5 or three times the risk you're taking, and the losses are only one time. So if you do the math, you end up winning on the long run. So trading is not a quick rich get scheme. Trading is a long-term scheme. So you will have failed signals. I get failed signals all the time, but I have winning signals too. And every time I win, I'm able to easily overcome my failures. Anyways, going back to the false breaks. So the second signal was again a good false break. As you can see, there was this dragonfly. It tried to break inside here, but it did not break. And then the market pushed down here. And then again, a false break happened. And then market propels. Now, this is another signal which I took. I actually took one, two, three, all three of them out of this, two win and one loss. I'm still 75% up if you do the mathematics. So you have a series of inside bar for the signal number three. Market pushes down, breaks the low, and comes back in. Okay, so you can see how the market propelled higher from here. Next chart I'm looking at is Aussie US dollar. Aussie US dollar, again, you have this series of inside bars. It's an overall downtrend. A series of inside bars, and you have false break. Market pushes up and pushes down. Look what happens next day. The market has fallen so much for almost 1 month. Okay. Now, again, the second signal we have a series of inside bars. Market pushes up, falls below it, and then comes down. Again, in series of inside bars, market pushes up, falls. Okay, and this is the type 1 false break I was sharing with you guys earlier, where you have a high of the candle was breached and it closed below it, and then market propelled down. So, and this is only trading with the direction of the trend. Okay, I highly recommend you trade only in the direction of trend unless there is a very strong signal of or a false break in the opposite direction, and that signal is happening on a very important key level, like a weekly level or a monthly level or even a daily level that made sense. That's the only time you would want to counter trend. I I don't understand why people want to counter trend. When I started trading, I lost a lot of money counter trending. Okay, because I realized, uh, you think that okay, there is a signal, let's jump in. There's a signal, let's jump in. But it doesn't work that way. You have to be very patient and only take signals that make sense and very high quality. And especially counter trend trading, you will burn your money. So do not attempt counter trend trading unless you perfect how to trend trade. Okay, so this is my advice from my experience. If you want to take it, you can take it. Now another 4-hour chart, Euro New Zealand dollar. As you can see, there was an 89 EMA. Now, I sometimes use 89 EMA on 4-hour chart to find good entries, because 89 EMA on a 4-hour chart, especially when there is a first pullback, as you can see, this is the first pullback that's happening. Um, that is powerful because 89 EMA represents the daily chart, 21 EMA. Okay, so anytime you have a good signal that forms at 89 EMA, that especially a false break or something like this, that those are worth trading. Okay, so you can see how again you have a series of inside bars, market pushes up, comes down, okay, and then closes again, series of inside bars, market pushes up and comes down, and follow through happens. Okay, so these were two signals that you could have traded on 4 hourly chart. Let's look at the euro US dollar chart. Again, a 4 hour chart. As you can see, there's so many signals on the 4 hour chart, but you just have to pay attention to them. Okay, again, we are trend trading only, short-term trend trading. So what we have a series of inside bars. Okay, market pushes up and then shimmies back down. Okay, so that is a classical false break. The number second, again a series of inside bars, market pushes up, comes down, follows through. Okay, number three was really not that good, but I just put it out there. But it still kind of followed through, not that great, but it still kind of followed through because there was a past resistance that was here. So I thought that this would have made a support. Sorry, this would have made a resistance because there was support here. So that's the only reason you would have taken this trade. But you see the follow through wasn't that great. But this number four, you had this great pullback, sudden pullback, and then you have a series of inside bars, and then you have market push up and comes down. Okay, so that is, what is that? That is a false break. The tail that comes out of the mother candle high and pushes back in, or the previous day's high and pushes back in, that is what you are looking for. Okay, if you want to be successful in trading, you need to learn how to play the game of the big players. Big players do stop hunting. They will stop you out. Because they want to buy at the price. Okay, imagine you have $1 billion you want to buy. Okay, but the price you want to buy is not available. Right now the market is higher price, so you want to have a better price to buy. So maybe you can use maybe $250 million first to fall the market, to make the market go against you. Okay, once the market goes against you, once they find the price is right, then they put $1 billion and buy the market again. That is what the big banks do. This is how the order flow management works. Okay, so once you learn this technique, how the order flow management works, you will know why false breaks happen in the market. Okay, so let's go back to the 4 hour chart. This is an Aussie US dollar 4 hour chart, and what you're looking here again is not a very good false break. I just kind of put it there for the sake of it. You can see that how the market broke the high and kind of shimmied back in. Because this was such a trend trade, you could have taken this with the direction of the trend, but otherwise not really highly recommended trade something like that. Okay, again you have a series of inside bars, market pushes up, comes down, pushes up and comes down again. So that is a false break, the protrusion that breaks the high and comes back. Okay, so once you start seeing the market like this, you will have a completely different view of what the market is telling you, and you will be able to identify what exactly is happening in the market. So now coming to the steps to trade false breaks. So like I have been saying, that is that you have to identify the trend using high high and higher low sequence, or the 8 and 21 daily chart crossover. Okay, I don't really recommend 8 and 21 crossover, but you need to learn how to draw support and resistance lines. You can go on my YouTube and see how I draw support and resistance lines and identify a higher high and higher low sequence. Once you identify higher high and higher low sequence, you will know what is a short-term trend. You will trade only in that trend. Okay, false breaks are to be traded only with a trend. Draw support. Second step is draw support and resistance levels. Okay, You don't need any indicator on your chart. Only you need support and resistance levels. Okay, and an understanding of what the trend is by using simple logic of higher high and higher low, and or you can use 8 and 21 if you're not comfortable. Trade false breaks only the directional trend. That is very must. As a new trader, you must trade only false breaks in the direction of the trend. Number 4, trade false breaks only from horizontal daily levels. When there is a level, only that's the time you will trade false breaks. If there is no level, you are not going to trade false breaks, because they can happen somewhere in the middle of nowhere, and then you will think that, oh, I want to take this trade. No, you will not take that trade. You will only take the trade only in the direction of the trend, and only from a level that is clear. Okay, because imagine if you take like 100 trades, and then 50% of them fails, you're going to be really frazzled. So you want to take only high quality setups. Maybe trade only 2 times a week, or maybe 5 trades in a week, but those trades, they make sense, and then you're able to make money from them instead of trading a lot, because a lot trading, it doesn't work. It doesn't work. You need to trade less if you want to make money in trading. I personally struggled a lot when I started. I've learned a lot over the period of time that trading less is the way to make money. Okay, enjoy your life. That's the key. So number 5 is never trade false break on 4 hours that are close to upcoming daily chart and support resistance. So keep an eye on the upcoming resistance or support. If there is an upcoming support and resistance, are you buying into the resistance, or are you selling into a support? So you have to keep an eye on that as well. If that is there, you don't want to trade. Okay. And the sixth most important thing, the key to trade false break is to wait for the formation to happen. Okay. All the great traders, they anticipate the trade. They don't participate. What I mean to say is that if you see a trade, they don't jump in. They anticipate what will happen. And then once that happens, then they jump in. So they wait for the formation to happen before you jump in. It's very easy to say, but once you see market pushes in one direction and pushes against you, that's the time you want to get in. You don't want to trade when there is no formation clearly available in front of you. Once you see it, that's the time you are gonna get in. Okay. So I'm just gonna take about 10 minutes or so on a live chart and see how we can spot the false breaks. I'm looking at a GBP JPY chart, and let's see what all the false breaks we could have traded. Right here. So that's one spot I actually have marked for you. I'm going to zoom in here. And I'm just going to draw a box here. I'm really not used to this trading view, but I'll draw this drop right here for you guys. Okay. There was a previous resistance. As you can see, there was a previous resistance right here. Okay. So market was pushing higher in this direction. Just going to draw this. Okay. But there was a previous resistance, okay, and then look what happened. You have a series of inside bars, okay, and then what happens? Market pushes up, breaks the high of this candle, and then closes below it. That is, what is that? That's a false break. Okay, so that is one of the things and look what happened after that. This is a daily chart, by the way, guys. So This much data is almost 1 month data. So if you're able to capture this move, imagine how much money you could have made. So that's how you trade these false breaks. Another false break, as you go along here, look, another false break. Break of the consolidation right here. High here. Market pushes down, comes down here. It did not follow through. It would have probably be a fail signal, but that's absolutely fine. Look here again. Market pushes higher from here and then follows through. Okay, that's another good signal for you to trade. Look here again. Market comes, pushes high and closes below 3. So even if you have taken first time, you would have still made good 4 trades and 1 losing trade, and you will still be a winner in this trading game. Okay, let's go back and see if we can find something else here too. Okay, you don't want to, okay, look at this. This is the range. This is the type of situation where you don't want to trade. When you see a lot of chop like that, there is no trade. Okay, you don't want to go in and say, oh, okay, I'm going to trade the false break. Look, this is an amazing false break right here. Right here. Oh, that is a false break, because the market comes down and it is about time to go in. Okay, it is a very strong chop. You don't want to trade. Let the market come out of it. Okay, once the market comes out of it, that's the only time you would trade. You really don't want to trade in chops right here. Okay, let's go further here. Look, classical false break. Previous high, market closes, pushes higher. As you can see, there was this previous level, and then you have market pushes high, closes below, and bam, the market follows through. Okay, so that's how you trade the false breaks here. Because there was a previous level, very, very safe entry for you to enter. If there was no previous level right here, I would not have traded it. But there was a previous level, I entered it. Okay, next thing, let's see if we can identify some more. There are so many of them. I'm actually not paying much attention right here, but you get the point what I'm trying to say here. If you want to do trend trading, perfect example of that. So the market is trending up, as you can see, right? So look at this, market comes down, shimmies down, breaks the low of this candle, and shimmies back in. What is that? That is a false break. Okay, and then how you get in, you can, there are some strategies which I'll share with you guys later, but the way you get in is basically you take the high and the low of the false break and you put your entry at the 50%. So if you put your entry, let's say right here, put your stop loss below this, you can easily make your 3 times the reward right here, which is exactly, you can see right here. Okay, so that's how you trade the false breaks. Okay, so now let's going back to the trading strategy on false breaks. So this is what you would be doing when you see a false break. To trade the strategy of the false break, what exactly you do is, if you have a 4-hourly chart, what exactly you do is you basically, once you see a false break, you want to make a market entry, because sometimes market does not retrace back and give you a better entry. So what you do is you take the high of the false breaks as a stop loss, and then you target 2 or 3 times the reward for this one. And if you have a daily chart, you want to generally wait for a 50% entry. So you take a high and the low of this candle, and you put your entry at 50% and put your stop loss above it. and then that should be a good enough strategy for you to enter. And then again, for something like this, you can enter the 50% market for 4-hour and daily chart both. If you have a deep pullback, something like this, then what you can do is you can take the high and take the low of this whole range. Take the high of this candle, take the low of this candle, put your entry at 50%, and that's how you'll be able to get into the position. Okay. And then trading strategy for false break with inside bars. It's simply the same thing. What you do is you basically you put the low, you put the middle, you take the high, you take the low, and you put your entry in the middle, put your stop loss below this, and then you should be able to go in the direction of the trend. Same thing here. You have an inside bar. The way to trade this is basically you trade the break of the inside bar, put your stop loss above the high, okay, of this mother candle, and that should be your entry, and you can write the market. Okay, so as a conclusion, basically the few things I want to point out, number one is that you trade false breaks only in the direction of the trend. Okay, trade false breaks from key pullback levels in trending market. When you have a clear level, that's the only time you would be trading false breaks. Okay, trading false break in both direction when you have a clear range or channel present. So if you have a channel or if you have a clear range of the market, then you can trade in both the directions, against the trend, with the trend, stuff like that. Okay, but counter trend breaks, false breaks that are strong, like you should trade counter trend trade false breaks that are strong, they are very obvious, very strong, and only from previous strong levels. Okay, you would trade only when you have a very strong level, as I was showing you earlier in the GBP JPY chart. Okay, and I don't want you to take what I'm telling you and start applying it. I really want you to take this information and research the market for false breaks and see what happens. Do you see what exactly is happening after false break? Try to study it for a bit, and then you will understand what exactly false break is and what exactly is false break doing in the market. Okay, well, this is what I wanted to present it to you guys. Thank you for watching. I hope you guys like my presentation. You can join us for the free strategies and articles, and you can head over to learnthepriceaction.com and check out the free articles and strategies I write on the price action, and you will be helpful. Hopefully it'll be helpful for you. In the future I will be launching my Forex course, but right now everything is free, so take advantage of as much as I can, and hopefully it helps you in your trading career.